Why is everyone so convinced a financial collapse is coming? And more importantly, do we have a way out? Our guest Larry Lepard, a veteran investor and macro analyst, brings decades of experience studying monetary systems and economic cycles. In today's discussion, we'll examine three central points: why our current financial system is headed for either a controlled reset or chaotic hyperinflation, how a one-time painful transition might be necessary to fix our broken money, and why Bitcoin could play a crucial role similar to oil's impact in the 1970s. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. The most fascinating part comes in our final segment, where Larry draws a compelling parallel between Bitcoin and the petrodollar system that saved the U.S. economy in the 70s. But first, let's understand why Larry believes our current monetary system is approaching a breaking point.
It's gonna just continue until we blow up again, and at that point in time, they will have to print more money, and eventually, I think we will either have extremely high inflation leading to some good political leadership and a monetary reset, or we'll have extremely high inflation leading to hyperinflation and the complete failure of the currency. And it's unclear which. It depends upon politics a lot, but I think one of those two cases is going to happen in the next several years, and then become acute before what I kind of consider I think this whole thing is going to get solved by 2030. That's 6 years away, but we're in it, and it's a fourth turning, and they typically take about that amount of time. So
Larry provides a stark but crucial analysis of where our monetary system is headed, laying out two possible scenarios we're facing. What's particularly important about his explanation is that he's not just speculating. He's describing an inevitable outcome based on the mathematical reality of our current financial situation. This first argument establishes the foundation of our thesis. We're approaching a point where our monetary system must undergo significant change. When Larry talks about extremely high inflation leading to either a controlled reset or complete currency failure, he's describing the end game of a decades-long experiment with fiat currency. I've spent years studying this through my work with Bitcoin companies at 1031, and what's fascinating is how the warning signs Larry describes are already visible: persistent inflation, growing government debt, and declining currency value. His timeline of resolution by 2030 isn't arbitrary. It aligns with major debt cycles and demographic shifts that are putting increasing pressure on our financial system. The political aspect he mentions is crucial because it highlights how this isn't just an economic problem. It's a political and social one as well. The choice between a managed reset and chaotic hyperinflation will largely depend on whether our leaders can recognize and act on these problems before they become unmanageable. This first pillar of our argument demonstrates why change is inevitable, setting up our next crucial point about what this transition might actually look like. But stick around, because in our final segment, Larry reveals a fascinating historical parallel that could show us exactly how Bitcoin might save our financial system, just like oil did in the 1970s.
But let me just say that almost no matter what happens, I don't see how we do any kind of a reset without there being a pretty big one-time inflationary event. But as I argue in the book, much better to do it once, have it hurt, get it right, and then be on sound money. Because history shows that when you return to sound money, economies function pretty well. But to get from here to sound money, somebody's going to have to lose.
Yeah.
Because there are a lot of assets out there that are misvalued, most particularly bonds. and they're going to get marked to market, and the bondholders aren't going to like it.
No.
And that's going to be inflationary. So there's no way out of this trap without some pain.
This segment builds directly on our first point by explaining why the transition to a new monetary system can't be painless. Larry's analogy of resetting a broken bone perfectly captures the essence of what we're facing: short-term pain for long-term stability. This second argument is crucial because it helps us understand not just that change is coming, but what that change might feel like. The bond market discussion is particularly significant because it reveals the scale of the problem. When Larry talks about bonds being mispriced and needing to be marked to market, he's describing a fundamental repricing of what's considered the safest part of our financial system. This isn't just about government debt. It's about the foundation of our entire financial structure. The inflation he describes isn't just a side effect. It's actually a necessary mechanism for this transition to occur.
Everyone knows about Fold. It's the app where you can earn the most Bitcoin rewards for everyday purchases. Fold now lets you double stack rewards with gift cards. Use your credit or debit card to buy gift cards and earn both credit card rewards and sats. Fold gift cards help you grow your stack with every purchase. If you're not shopping with Fold gift cards, you're leaving sats on the table. Get a 20,000 sat welcome bonus. Go sign up now at foldapp.com/Marty.
What makes this point so powerful is how it connects to Bitcoin's potential role. When Larry mentions sound money principles, he's describing exactly what Bitcoin provides, a monetary system that can't be manipulated or devalued. The historical examples he references aren't just theoretical. They provide real evidence that economies function better with sound money. This directly supports our thesis about Bitcoin's role in a monetary reset. You won't want to miss our final segment, where Larry explains exactly how Bitcoin could facilitate this transition, drawing a fascinating parallel with how the U.S. used oil to save the dollar in the 1970s. It's a historical comparison that perfectly ties together everything we've discussed. Let's see how Bitcoin might actually provide a practical solution to this seemingly impossible problem.
I mean, if you did a Bitcoin strategic reserve, I mean, Trump said something also that I thought was very interesting when he said Bitcoin is the new oil. I mean, they had an inflationary problem in the 70s, and part of the way they dealt with it all was, the petrodollar, and they had a deficit problem, and the Triffitt's dilemma, I guess, was biting in the 70s, and what they did is they revalued oil upward greatly, with the Arab oil embargo, and apparently Kissinger was involved in part of that process. And, I mean, if you've got too much debt in nominal terms today, and you've got to devalue it, what do you devalue it against? You've got to devalue it against something that's neutral and that's got a more limited supply. And historically, that would have been gold, but, we're beyond that now. And the natural thing is Bitcoin. And so the question then becomes, how big is it? How aggressively do they do it? How much does that push the price of Bitcoin? And does, Bitcoin become the natural choice for some kind of a monetary reset? And I think the answer is all of those things are possible, but how we get from here to there is anybody's guess.
This final segment brilliantly completes our thesis by showing how Bitcoin could practically facilitate a monetary reset. Larry's comparison between Bitcoin and the 1970s petrodollar system is absolutely critical for understanding how we might transition from our current system to something more sustainable. Let's break down what makes this historical parallel so significant. In the 1970s, the U.S. faced a crisis remarkably similar to what we're experiencing today: rising inflation, declining currency value, and a need to maintain global monetary dominance. The solution then was to effectively back the dollar with oil through diplomatic agreements with Saudi Arabia and other OPEC nations. This created artificial scarcity and demand for dollars, helping stabilize the system. What Larry's suggesting is that Bitcoin could serve a similar but even more powerful function today. The concept of a Bitcoin strategic reserve that Larry mentions is particularly fascinating because it solves several problems simultaneously. Unlike oil, Bitcoin has a truly fixed supply. There will only ever be 21 million coins. This makes it an ideal asset for devaluing debt against because its scarcity can't be manipulated by any single country or entity. When Larry says, you've got to devalue it against something that's neutral, he's highlighting one of Bitcoin's most important features: its political neutrality and resistance to manipulation. What makes this comparison so powerful is that it provides a practical framework for how the transition we discussed in our earlier segments might actually work. Just as the petrodollar system gave the U.S. a way to maintain monetary relevance after abandoning the gold standard, Bitcoin could provide a path forward from our current debt-based system. The key difference is that Bitcoin offers this solution to all countries simultaneously, not just the United States. Trump's recognition of Bitcoin as the new oil suggests this idea is already being seriously considered at the highest levels of government. In my own conversations with policymakers and investors, I've noticed a growing understanding that Bitcoin isn't just another asset. It's potentially a crucial tool for navigating the monetary reset that Larry described in our first segment. This brings our thesis full circle, showing not just why a reset is necessary and what it might look like, but providing a practical solution based on historical precedent. Will Bitcoin trigger a financial reset, or will the system collapse first? Let me know in the comments. I read every single one. And if you found this monetary analysis interesting, you'll want to watch our breakdown of Bitcoin's path to $400,000 and what's holding it back right now. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble. Stack sats.